Buckle up traders, as the new trading week is going to start on 6th of May and the dollar is on hold. But big central bank moves are coming up. The Fed is keeping its cards close. Powell hinted at a wait and watch policy, leaving the dollar's direction uncertain. But hold on, as the coming week is all about central bank action. Australia and England are set to make huge policy announcements that could shake up the forex market. Will they follow Fed's lead or go rogue? We'll crack the code and navigate the coming week volatility in this week's forex forecast. So don't miss out, hit that subscribe button and dive in. So let's begin the week with dollar index. I'll switch on to dollar index long-term chart, that is monthly. Now here, based on my monthly time frame chart, so I'm just turning it into a closer view. I'm just going to zoom in here. So based on this monthly chart for dollar index, if you notice here, we have a strong supply zone. So I've marked a horizontal box here which shows a very strong area of supply. Now moving closer, coming closer to the recent price action again. Dollar index, after dropping, I'll remove the Fib tool here. So dollar index, after dropping from this recent high that was around 115, it started retracing upwards and it got blocked at the same resistance level. Now got blocked, could not break above. Now again it has started moving up and currently it is hovering at the same resistance zone. Coming down to weekly chart, turning it into a line chart and taking a bigger view. So I've zoomed out. So here, based on weekly chart, dollar index, after creating first leg up, second leg down in the corrective phase, the longest third, and now it has to complete its fourth wave, that is usually a corrective wave, and fourth wave can come in ABC pattern. So this is A, B, and now we can expect C leg of the fourth corrective wave to move downwards. And I'm going to measure on candlesticks the extension to the downside. So here I'm connecting from top to bottom, measuring A, connecting to B, and based on ABC pattern, I wouldn't be surprised if dollar index moves to Fib extension 61.8, that is the price level of 97.43. So we can expect this. Now coming to daily. Now based on daily, if you notice, the current pattern on daily chart is creating a sequence of higher lows. We have a low here connected with higher low, higher low. We have a sequence of high and higher high. Now based on the recent most price action, I'm trying to compare the recent most high. So higher high formation on MACD lines, and I can see some weakness coming on the histogram basis. So which means this could throw dollar index in the downward direction. Now whether it will be a temporary move or it is going to be a long-term downward trend, ultimately throwing dollar, pushing dollar to Fib extension 0.618 and the price level of 97.5, I don't know, but at least in the short run, dollar is facing a massive resistance around 106 dollar index, and we can expect dollar to be short-term bearish. Here I'm connecting a rising trend line. Until it breaks below this rising trend line, the short-term view is that dollar is going to remain under pressure. If it breaks this rising trend line, then we can confidently say that dollar is ready to dive to the lower levels. So this is the view for dollar index based on monthly, weekly and daily time frame. Moving to next lower time frame, that is 4 hours. Now on the 4 hourly chart, it has printed equal highs or higher high pattern with bearish divergence, and it has already crossed the BOS level. Now, once the BOS level is crossed, the instrument is expected to take support at the next major level. So now it is at the major support level. We can expect a short-term bounce and then again continuation to the lower direction. Now, if dollar index is under pressure, there was no clarity from Mr. Jerome Powell in the recent week. We had interest rate announcement. The rates were not changed, but as per the speech of Mr. Powell, he has made it very clear that until he sees inflation coming back to 2% mark, he is not going to get softer. So he may keep the rates unchanged, and moving forward, he'll be waiting for more data to reduce the interest rates maybe somewhere in June. Now let's see what's happening with Australian dollar with US dollar. Now again, I'm going to clean my existing drawings, and it's a monthly chart. Now based on monthly chart, I'm moving back to candlesticks. If you see, okay, before moving to candlesticks, if you see, we have a major support here. So I'm going to see what's happening on candles chart here. So based on candlesticks chart, AUDUSD has taken support around this area. So current month's candle is moving upwards after taking support at this major support zone, and the next major resistance based on monthly chart is here. So the major resistance level, let's mark it major, let's mark it as monthly resistance. So the monthly resistance price is around 0.6812. Currently it is at 0.6607. So there is a high probability of another 200 pips in the upside. Now moving down to weekly chart. Now based on weekly chart, Australian dollar has found support at this support zone marked on monthly chart basis. The current candle is the current weekly candle is showing a lot of strength in the buyers, and right now it is sitting at a crucial resistance area. So it reached to the resistance area of 0.6626 and it could not break above. So if it breaks this weekly resistance after the interest rate announcement in the coming week, we can expect Australian dollar to cross this resistance, retest this area as support, and march towards the next important resistance of 0.6812. In case if we see a dramatic turnaround, a dovish remark from the Australian Central Bank, then I will wait for the sellers to push the price lower than this rising trend line so that we can continue in the downward direction. So this is the alternative view, but most likely it is going to continue in the bullish direction based on the current pattern on monthly and weekly. Now switching to daily. Now here it got stopped at the major resistance which we have already marked on the weekly time frame, but there is no slowdown on MACD. Look at the histogram, it is clearly rising. The bulls, they are increasing the momentum. MACD lines clearly bullish. No signs against, no bearish divergence. So I don't think that the buyers are going to stop at this resistance. Most likely they are going to break after the monetary announcement, and they are going to take this instrument to the next higher resistance area. Coming to 4-hourly now. Now based on 4-hourly chart, I'll again turn it into a line chart. Now here we have double bottom with MACD lines getting bullish. It's a continuing style of divergence here, and we have a sequence of higher lows. So low, higher low, higher low, higher low. We got a lower low pattern here, but again the buyers, they took the price higher to the next area of resistance and created a higher high. I do not see bearish divergence coming into play. So the important support is here. So this becomes your major turnaround point, which is exactly at 0.6463. So a break below 0.6463 will bring back sellers for this instrument, whereas if buyers maintain their support higher than this price of 0.6463, then we are looking forward to the next major target at 0.68 to capture the upcoming move of 200 pips. Now, if I'm comparing Australian dollar and euro, so based on the comparison of euro and AUD, the next instrument is EURAUD, and starting from monthly time frame, what I've done here, I'll just remove these extra drawings from the right hand side. Okay, so what I've done here, I've applied fib extension in the upward direction. So I've started from this monthly low. I've taken the first extension, like first bull run at this area, because this is higher high formation with bearish divergence. So the first bullish cycle ends here, and I've connected to this higher low. So we got extension line. So the first extension line is at the current level. So right now, Euro Aussie, it ran up to this major resistance, Fibonacci resistance, coming from the fib extension and got blocked. It's hovering at the same area for many months. The buyers are unable to take this instrument's price to the next level of resistance. In fact, I can see signs of weakness here. Now, I'm switching to weekly chart. Now, based on weekly line chart, we got lower low formation long time ago, which started the bullish run. Break of structure happened. We had higher low sequence and higher high sequence, but this higher high sequence is coming with bearish divergence. So higher high formation, bearish divergence coming into play, and this was the first push down. Now, based on the divergence, we need to mark the BS level. So here is our weekly BS level, which is not yet done. So weekly BS is pending, it is not yet done, but the sellers are creating a sequence of continuously, they are creating a sequence of lower lows and lower highs. So buyers, they tried to take the price higher, but they could not break the major resistance at 1.6722. So turning to candles, look at the candle pattern. It is purely bearish here, and I'll just remove this fib extension. So here we can check the downward target. So this is the highest price. This is your first lower high and first low. So I'm going to plot fib extension in the downward direction here. So I'm connecting the highest point, first low, and the lower high. So based on the downward fib extension, let's change the color here. So I'm going to make it as red. Okay. This could be changed to a darker color. Okay. Now, based on fib extension plotted in the downward direction, it has already crossed extension level of 61.8, and the next major target is fib extension 100%. So the price point of 1.6096. If it continues further to 1.618, then we can target 1.5629. So currently we are at 1.6269. If we target fib extension of 1.618 and the price point of 1.5629, so there is a probability to capture another 600 pips in this currency pair. So everything remains bearish on the weekly time frame. The instrument is continuously printing lower highs and a sequence of lower lows. Now let's move to daily chart. Now here, based on daily chart, I'll turn it into a line chart. If you notice, we got one more bearish divergence, and then it started forming lower highs, lower highs, lower highs, low, lower low, lower low, and right now it is not showing any signs of exhaustion. I don't see bullish divergence coming into play, so it should continue confidently in the bearish direction. So Euro Aussie, the plan is to sell on the rise. Now let's move to 4-hourly chart. Even on 4-hourly chart, I do not see any signs of exhaustion. In fact, I'm going to plot a trend line here, a bearish trend line, and if the sellers remain in control, then it may pull back during the week. So do not forget, we have interest rate announcement from RBA, that is Reserve Bank of Australia. It may bring a lot of volatility in Australian dollar based currency pairs. So during the week, we may get to see this pullback, retest of this falling trend line. So until it remains lower than this level, so this horizontal box, which is around 1.6500, my idea is to sell on the rise. So Euro Aussie, we are looking for bearish moves. The next instrument I'm going to talk about is Pound New Zealand. Again, I'll start from weekly here. Now, based on weekly chart, if you notice, it ran into a major area of resistance, that is around 2.1432, and then it started printing lower highs and lower lows. Now, after a while, it started moving in the upward direction, creating highs and higher lows, but it got blocked at a major resistance area on the weekly chart. So I'm going to highlight the major weekly resistance area. So here, this is the major area. So we got a false break, spike up, and now we got a weekly closing below this area. So it could not take the price back to the previous resistance. In fact, it is now showing signs of weakness. Even on MACD, the histogram is getting weaker now. From dark green, it has turned to light green. MACD lines are pointing downwards, and it may complete a bearish crossover in the coming week. Let's quickly move to daily chart. Now, based on daily chart, we can see signs of exhaustion. We have higher high formation here, and we got this bearish divergence coming on MACD lines and histogram together, which is a very strong type of divergence. Now, based on this H1, H2, it needs to break below this BS point. So currently it has not broken. So in the coming week, if it breaks below this point, then we'll be looking for the retracement and we'll look for a sell trade here. Now moving to 4-hourly chart, we can expect that Pound New Zealand can take support at a major support area here. So we have support and BS level here, BS level coming from the daily chart. We also have some major support at this level, that is 2.08. So we can expect short-term retracement and then continuation in the downward direction in the upcoming week. So the plan for Pound New Zealand is to sell on the rise. Now, next instrument I'm going to talk about is US dollar versus Swiss franc. I'll start from the weekly chart. Now here, based on weekly time frame, if you notice, long time ago we got this higher high formation with a very strong bearish divergence. So the bearish moves started from this level and bearish moves ended at this level, that is around 0.8400. It started around 1.01 and now we got bullish divergence here. So this is the full bearish cycle coming into play. So I can mark Fib retracement starting. I'll mark Fib retracement on candle chart. So I'll start from the highest candle here and I'll drag Fib retracement to the lowest candle. So once a cycle is completed, we can expect a pullback at least towards 50% or 61.8 on the Fibonacci scale. So right now we have seen that the buyers have taken the price back in one straight move to the 50% area of Fibonacci, and we can expect some short-term retracement here, and then again continuation to 61.8. So right now I am focusing on this short-term retracement. We can see that MACD histogram is looking exhausted here, so buyers are tired and they need some pullback. Now I'll move back to weekly chart. Sorry, we have already done weekly. I'm moving back to daily chart. Now here the previous high is serving as major area of resistance. I'll turn it to line chart again, and if you notice in the current bullish run, it has formed higher high with bearish divergence. So I need to connect from this high basically. So here is your H1, this is your H2, and we have bearish divergence coming here. It is showing signs of weakness, and it has already created a low because it has broken below this massive support. So it has broken below, it has closed below, and we have higher high formation with bearish divergence. Now we have major support around the round figure of 0.9000. In the coming week, I can expect sellers to take the price to 0.9000, and then the retracement will start. So I'm going to measure once this retracement is completed, once this downward move is completed and price reaches to the level of 0.9000, then we can expect this pullback, and I'll capture short-term sell moves after this retracement. So I'm going to apply Fibonacci retracement on this. In fact, it has already reached to this area. Okay, so based on candle, it has already reached. So I'm going to connect from the highest point of this candle to the lowest one. Now we can expect retracement back towards 50 or 61, and then continuation in the downward direction. So if you notice, we have a cluster of candles around this area, so which is coming exactly around 50% or 61. So it is going to create resistance when price will start moving up for the correction, and the buyers will find resistance around 50 or 61.8, and then I can expect the sellers to take the control from the buyers and push the price lower. So here I'm going to 4-hourly chart. Now if you notice, we have already plotted Fib retracement starting from the highest candle to the lowest candle. I can see some signs of slowdown on MACD histogram, and we have found a major area of resistance here. So this is again a very high probability that in the coming week buyers can take the price back towards 61 or 70% Fib retracement, and then we can expect continuation lower. Now please notice, or please do not expect that it cannot be like one straight move in the upward direction. So the retracement, we can't expect the price to retrace immediately back to 38 or 50 or 61, whatever the price level we are looking forward to. So the retracement or market is always, so the retracement is expected to happen in phases, in waves. So market can go back to 38 and bounce lower, then it will again jump up, it will go to 50 or 61. So it will go back up in phases, in multiple waves. So do not get trapped by selling early here. Wait patiently until it reaches back to 61.8 or 70 area. Once we see signs of exhaustion in the buyers, once we see bearish divergence coming here on the lower time frame, we can join the sellers. Now finally, I'm going to talk about gold. Now as dollar index is not giving a very clear picture, so in the short run, I can expect some sideways or consolidation in gold, sideways action or consolidation in gold. But my long-term plan or my long-term view remains bullish. So here, I'll cut the story short. I have plotted Fib extension from, okay, I'll start from monthly here. So I've plotted Fib extension from this low, which was at 1642, and I've plotted this golden or yellow colored fib extension. So I've connected to the first high and the first higher low. Now based on this fib extension, we have already reached to 100% of this yellow cycle. The next high probability area is here, 1.618, and after that I've plotted another fib extension on a weekly chart. So after monthly chart, I moved to weekly chart, and here I've plotted the second fib extension starting from 1809, connecting to the first high and the correction downwards somewhere at 1969. So this is the brown colored fib extension, and we have a overlap here that is a very strong magnet zone. So this is a very strong magnet zone. So currently price is sitting at this magnet zone, above this magnet zone. So this magnet zone is behaving like support. So the zone is precisely around 2280, 2275 to 2280. So until I see a break below 2280, I cannot expect gold to move further downwards. If it breaks below 2280, then we can expect gold to touch the price level of 2207 to 2170, only if we get a break below 2280, which is not yet done. Now I'm moving to daily chart here. Now I've already added one more extension on the daily chart. So this is my third extension in the bullish direction, and if you notice that gold has touched precisely the lower time frame fib extension of 400%. So it reached precisely to 2431. Currently it is sitting below 2319, and it is sitting above 2275. So 2319 is right now playing as major resistance, and 2375 to 2275 to 2280 is right now playing as major support. So I'm going to highlight these two price levels. So resistance and support. So currently on lower time frame basis, you can see that gold is range bound. If we get a close above 2319 with a major breakout, I will get into my bullish action, and I will buy on the dips for the next upside of 2388, followed by 2416, and finally I'm going to target 2560 if it closes below 2275. Alternatively, then on the retest, I'll be targeting the lower price level of 2207. So only in the short term we can expect gold to be bearish if it breaks below 2275. Otherwise, my long-term bullish plan remains intact. So this is the plan for upcoming week. I hope I've added value with my technical analysis. If you want to understand the analysis of any of your favorite instrument, please feel free and DM me. Have a nice and profitable trading week ahead. Bye-bye.